Hi there, Michael from the Michael Smith team here. Listen, my team and I, we get asked a lot of the same questions again and again and again. And don't get me wrong, it's great. We love helping people. But, if you've ever listed a home with us, you know that we don't really like the reactive approach. And we tend to focus on the proactive, getting your home in front of other people. And we thought, why don't we take the same approach to some of the most common questions we get? Because we appreciate most people don't do this all day, every day like we do. So today I want to start something called, that we're dubbing Michael's Corner. And it's going to be a periodic update and answering some of the most common questions we're getting so that you, when you are ready for your next purchase, whether that's your first one or you're downsizing because the kids are gone, we want to make sure you have the information you need so that you're making the right decision for you. Today's topic, we're going to be covering, we hear in Calgary that we're in a buyer's market. Well, what exactly does that mean? What is the definition of a buyer's market? And what's that look like? How's that affect you in practical terms? So, in a nutshell, essentially what we're talking about is supply and demand, right? We all remember that from high school economics classes. In terms of definition, this is a little funny because there's no official definition of when we cross in from a balanced market to a seller's market or into a buyer's market, but there's some pretty close guidelines that most of us follow, plus or minus a couple weeks here and there. So the way to look at it, a seller's market is 3 or 3.5 months or less of inventory. Okay. And what that means by inventory, we mean, let's say there is 1,000 buyers that are going to buy a home this month in Calgary. Okay. That means we have at 3 months of inventory, we have 3,000 homes on the market at that time. Okay. And that means there's very little selection. There's only 3 homes for every buyer. People tend to get, very excited about this, and it tends to lead to higher prices and so on and so forth. I'll cover that more in a second. Balanced market is 3 to 6 months of inventory. And definitions vary here a little bit. Some will say 3.5 to 5.5, but you get kind of that gist of where it is. And a buyer's market is typically anything 6 months or over in inventory. Okay? So, now what exactly does this mean to you in terms of practical terms? Well, let's start with the seller's market. Okay? It's been a little while since we've been in this, but if those of you who have been paying attention for a while, you'll remember we've been through a couple of these in the last 15, 20 years. So, if you're a buyer in a seller's market, things you can expect. Lots of competition. You have to move very fast on these properties. When that one comes up that you like, you better be there day 1 or day 2 viewing it and ready to write an offer quick. That also means you want to have all your ducks in a row, make sure all your financing is good, everything like that, because likely if you have any unusual clauses in your agreement or conditions, it's likely going to get pushed away for a more seller-friendly agreement, and they have that flexibility there. Now, on the flip side, let's say you're selling in a seller's market. What does that mean? Well, all great news, right? Less chance that your home won't sell because, let's be real, even in a seller's market, lots of homes still don't sell. Higher asking price typically, as long as you're reasonable, you have more flexibility to kind of push that envelope a little bit, especially if you've got a good marketing plan to really create that urgency for you. And buyers are more likely to take a fixer-upper, and this is an important one, okay? Because this changes pretty dramatically depending on the market that we're in. Okay, so let's say you have a home that all of a sudden, it's at that age. It's 20 years old. You're starting to think about new furnace. If you haven't replaced your hot water tank yet, that's coming soon. Windows are coming up. Roof is coming up. Those are a lot of expenses, right? In a seller's market, you're much more likely to get buyers that are willing to take on that out-of-pocket cost. Shifting gears, what about a balanced market? Okay. Well, this is pretty straightforward, as you can imagine. If you're a buyer, you've got decent selection, decent pricing, and a perceived stability along with the consistent pricing. So a lot of people are nervous about the ups and downs. That's why a lot of people don't invest in the stock market for the same reason. So a balanced market is, again, that 3.5 to 5.5 or 6 months range of inventory there. Now, what about if you're a seller? Okay. With a seller, it means you're more competition than in a seller's market. So you got to stand out a little bit more. Pricing and your marketing plan matter a whole lot more here. This is where sticking a sign in the yard is not necessarily going to get the results that you're hoping for. Okay? And on average, you're gonna be on the market for longer. And let's be real, selling your home isn't all that fun. So be realistic about this. It will likely take longer to sell your home in a balanced market as compared to a seller's market. Okay, so try to be prepared when you're planning out your timelines. Now, what about a buyer's market? And that's what we find ourselves in today in Calgary. What does it look like for a buyer? Well, a buyer's market, as it says, it's great for a buyer. You've got great selection, you've got great pricing, everybody's trying to undercut each other. You've got a higher chance of equity growth in the property, especially in Calgary, where we're well below our long-term average. So picking up a property now can do you a lot of favors in about 10 years as the market cycle tends to correct itself. Now, what about if you have to sell in a buyer's market? Well, you got to be prepared. There's fierce competition. We're now talking 6, 7, 8 homes for every single buyer out there. Now, how do you stand out against those 6, 7, 8 other homes that you're up against for that one buyer? Okay? Your average days on market goes way up. And as I alluded to, your marketing plan and your pricing are critical, especially if you don't want to give the farm away. If you don't want to have to undercut everyone, you really need a strong plan to create that urgency to get people emotionally attached to the property so they pay more for it. Fixer-uppers are also very problematic here. People have the option. When you're up against 7, 8 other homes at any given time, people have what they call the turnkey options always available. Why would they take your home where they have to invest time, effort, money to get it up to snuff when we can go 2 doors down and pick up that home that's already taken care of it? So selling in a buyer's market typically means a lot more out-of-pocket costs for the seller for getting it ready to go to market. Either that, or you tend to attract, in a buyer's market, you tend to attract mostly only investors. And let me tell you, investors are not paying top dollar for your home. If you have ever seen one of those we pay cash for properties and asked about it, you're going to be very sadly surprised about the numbers they offer you, because they're going to put in all that money and still demand a big profit at the end. Okay, so I hope you found that informative and useful. This format is a bit of a work in progress, so please be sure to leave your comments below, your thoughts, your ideas, and if you have any other ideas for future episodes, we've got a whole bunch of these queued up. Put your thoughts down below and we'll absolutely do our best to put that together for you in the future. So I hope you have a great rest of your day, and always make sure you have someone looking out for your best interests. Bye for now.